Well, good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box, let me know that you can. I would greatly appreciate it. All right. Thank you, everybody. Hey, Alex, how we doing? Andre, it's good to see you, my friend. Excellent, excellent, excellent. Yep, I got that. Thank you for that, Andrew. Afternoon, John. All right, let's go ahead. And now that we know the audio is working, let's do video. There I go. I'm here. All right. So as we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right. So here's our agenda. We're going to go through our follow us page. We'll look at today's trades, economic reports, market review, upcoming future trainings. We'll go through the topic of the week, and then we'll wrap it up with your stocks that you want me to review. A little bit about what's going on this page here, folks. Today's trades number two, which is coming up very quickly, that's for you, not for me, right? That's for you to say, here's the things that I've been doing, funded, non-funded, it doesn't matter. Win, lose, draw, it doesn't matter. How many contracts you did, it doesn't matter, right? All that matters is that you're doing it, right? And you are going ahead and executing the trades. Because even if you told me, Rob, it was a funded trade, I did phenomenal and made X, I would always call it a non-funded trade. It doesn't matter. Everything is non-funded. And if you understand anything about the FTC and the SEC legal rules, what we can and cannot do, without being licensed brokers, we really can't give any kind of advice or recommendations. Hence, that's what's in our topic, but, in our disclaimer. But as we go through, excuse me, and you are sharing these things out there, you are more inclined to continue to trade if you're kind of putting it out there. So you definitely want to do that. When it comes to your stock review, give me the candidate. Tell me what you're looking at it for. Give me some detail if you can, if you don't mind. Hey, I think this is a bullish stock. Is it, can we confirm the fib levels? I think I'm bouncing off the 618 and la di da di da. If you don't give me anything else but a symbol, that's okay. I'll still analyze it. It just may not be the way that you're looking for. If you're saying, no, I want to do a credit spread on this, what are your thoughts? Then I could look at it that way and say if I like it or not. I might say, oh, I think this is a better pattern for a day trade, a swing trade, or whatever it might be. All right. Excellent. So here's our follow us page. We will very shortly. Sean from our office has been on vacation for a little over a week. He gets back sometime today. So he'll probably be there tomorrow. Be here tomorrow. So we're going to get this page updated. We're going to have a link on here for our newsletter. Andrew, if you have that newsletter link available, you can drop that in. Folks, it is a daily newsletter which comes out every single day the market is open. It has some hot stocks in there. It's got the pre-market conditions, what's going on, and so forth. It's a quick little read for the analysis. If you want to dig deeper into one of the stories that are in there, you could obviously do that. But there's a lot of great information there. And of course, it's free. We're all about giving as much great content as we can to help you become a better trader, right? And that really is the end goal here is that. All right. So today's trades, what trades did you do? Drop them in. Morning, Helen. You made it. You made it. That's what counts, Helen. That's what counts. Good morning. Drop those trades in. Let me see. Let me go check on something real quick here while you guys are doing that. I want to see something from last week. I don't know how I can do this. All right, so I got to be very careful. I'm going to stop share for a sec because I don't know what monitor this is going to open up on. No, I don't like it. Give me a second. I'll do it this way. So I love it. There you go. A student sent an email in. Last week, right? Okay, I don't have to, I could share again. Let's see, monitor two. Okay, bueno. All right, I gotta save it. I don't want to share the students. I don't want any chance that I share the student's email address. So you just have to bear with me, guys. Sorry about that. But there we go. Okay. Let's see what monitor this one opens up on. Okay, perfect. All right. So this was from a student last week. So this is on SPY, right? Buy to open 2000 SPY July 14th, 2025, weekly 626 puts at 209. 2,000 contracts. This is a non-funded trade. Remember, we only talk non-funded, right? 2,000 contracts. Sold to close, you can see the date, July 14th. This is a TOS order form. July 14th, now that was at 11:52 a.m. At 11:56 a.m., they bought them at 209, sold them at 230. That was a $42,000 P&L for the day on that trade. 3.96% rate of change for their account, right? So overall, not too shabby, okay? So when we talk about, do you need to do trades like that? Excuse me, the answer is of course not. I'm happy if you do one contract. I don't need you to do 20 contracts, 100 contracts, 2,000 contracts. But, and I'm not showing that to impress you. I'm showing that because I want you to think of it this way. If you're sitting there saying, Rob, I see the trades you share, and there's no way I can make that kind of money. And you're looking at me saying one contract, 4 contracts, 10 contracts, 20 contracts, depending on the trade we look at. Here you've got someone that's doing hundreds and thousands of contracts, not hundreds of thousands, hundreds of contracts or thousands of contracts, depending on the position that they're in. Okay. So that is a signal, a symbol to you that it's something you can attain or build up to. Again, it's all non-funded. I'm not going to call anything funded trades. It's all a non-funded trade. It is something you can work yourself towards. Okay. But you should, every one of you should have things, not 2,000 contracts, but trades like that in your system, good, bad, or indifferent. You should be able to go in and cherry pick and go, I'll take that one, I'll take that one, and I'll take that one. You should be able to easily do that from your platform that you're in right now and pull that data up of what you're looking at. So Trip came back and said scalps on AMD for 14.7% in 4 minutes and the Qs for 45% in 13 minutes. See? Love it. Alex said, I took the plunge and entered a couple of funded covered calls last week. I won't say which ones to avoid joining the FCC, but I'm somewhat apprehensive, but optimistic. And it's optimistic. And it is brand new for you, Alex, right? So that is part of that. I get that, right? It's brand new. There's the apprehension. There's the nervousness. Did I make the right trade? What if it's wrong? First one I do goes against me. The rest of my life is shot. You know, I understand all of the symptoms or signals or signs associated with it, but you did it. Patty said, paper trade on Home Depot, put an order in and take me out at 25% above the fib line. And either I put it in wrong or it took me out early. Yeah, so it shouldn't have taken you out early, right? That's for sure. It should not have taken you out early. It should have taken you out if it hit your target. But early, then that's not what the order is supposed to do. So, Patty, you got to look. I don't know where it is on the platform, but you can set it up on many of the platforms that you could take it out on the bid or the ask price. So that could have been the difference in there, and that's part of why we do it on the stock price instead of and that I'm assuming that's what you did. If you did it on a stock, you shouldn't have to worry because you don't normally get big bid ask spreads, barring some crazy news on the stock. But if you put it on the options price, you could have a wide spread on the option. As the stock nears resistance, the market maker starts opening that bid-ask spread up. And when they open up that spread, right, you can get taken out just based on when they're taking you out on the bid or the ask. Right? That's why I'd rather have it based on stock price. So if we look at, Brenda said, no trade for me, late start. Hey, Brenda, did you see I put this up? I shared this from last week. All right. So much appreciated for that. Excellent. Thank you. Okay. Let's see. You're welcome, Brenda. It was Brenda that sent that in, by the way. Okay. So let me go through some trades from last week. I had one today. It's okay. DoorDash was right here. DoorDash, the brand new stock inside of Power Option Plays. We actually changed 4 candidates within Power Option Plays this last 2 weeks ago. We've already taken a half a dozen trades on some of the new candidates. I am stoked, Dash being one of them. And this is in pop. The trade I'm going to share with you now, if it's in pop, then yes, we will see it. If it's not in pop, then no, you won't see it. I mean, on here. But I'm going to start leaving my documentation up there unless things get crazy busy and I just can't see any longer. Then I'm going to have to pull it off, some of them off. My goal is to not take these off anymore, to leave all the pop trades up on the screen consistently. So the Dash trade was today. So we closed in a bullish bias rank of 1 on Friday. We gapped up today and stretched down. So what did that look like? On a 5-minute chart, we gapped up and we failed. We pushed back up, we came down, we pushed back up. Here, we gapped to the support line, right to the fib line. That fib line is 240.10. We opened on this candle at 240.10. So we opened right at it and bounced. Boom, boom. As we bounce up, we take the trade, 241, I think it was the entry. This was 240, right? Yeah, it was 241 was the entry. Right now we're at 241.01, so we're back to where we were. So this could become a, once I go back to a daily chart. It's thinking. There we go. So this could become a break-even trade, a losing trade. We're not out yet, so we'll see what lunchtime brings us. But last week, July 14th, we bought to open when the stock was at 241. We sold to open when to close when the stock was at 242.75. We're up 13.65 on that trade. Not bad, and there it is right there. We're at a bullish neutral bias rank of 1. We opened flat, pulled down a little bit. We bounced intraday. And there was the entry. So this was a great little setup in there. Let me grab. I got to go to closed positions because I've already moved everything from last week. There we go. So this was last week's setup, folks. So you can see on APP, we were up about $5,000. Costco, we were up 1,500. We were down on Carvana, 390. Right? Oracle. So CVNA, brand new stock, right? Oracle, we're up 3,900. Amazon, we're up 195. Coinbase, up 10,000. We lost $5,000 on CVNA on that one. So CVNA has not done as well for us as I could have hoped for. Okay. But if we look here, if we go to Amazon, and folks, this is the value of Power Option Plays. This is really where it's all at. Right? Look, and I scrunched it down. So this is from the 7th. We took a bullish trade here that went against us by 25 cents on stock price. Okay, so it costs $195 for 10 contracts. If you did one, it would be less than 20 bucks. Right? Then on the 11th, so 7-11, right? On the 11th, we took the trade off of here. We were in a bullish bias rank of 1. We gapped up, true bullish bias. We gapped up, we pulled back, we bounced. Beautiful setup. We got in at 223.75. We got out at 225. We're up $975 on that trade. Nice. Very nice. Right? Then last week, right here, 223.75. We got our bounce. We closed at a bullish neutral bias rank of 1. We moved up. We retested and bounced. We got out at 224. We're up $195. On one contract, you're up 20 bucks. Okay? Nothing crazy there. Roman said, Amazon went against me too. Glad I did what you did. Yeah, there you go. Roman, I love it. Great minds, right? Great minds think alike. Roman's talking about that 7-7 trade. If you're wrong, you're wrong. It's time to get out. There is no, hold on one more moment, one more day, one more hour, one more candle. No. If the trade is over, the trade is over. Be done. Go find something else to do. And if there's no other trades to trade, then literally go find something else to do. Leave. You don't need to sit here. Right? I get excited when it gets to 10:30, 11 o'clock, quarter to 11, quarter after 11, where I'm done. I could walk away. I don't have to sit here any longer. I can go do stuff that I want to do instead of stuff that I need to do, right? Which is business, trading. By the way, Andrew dropped in a link for Pop there. So you're more than welcome to click on that to check it out. Alex said, quick Pop question. All the trades and P&L are dollar-based, but do you know the appropriate percentage of P&L for Pop day trade, fib to fib wins? Like instead of saying X dollars on this trade, would you say it's usually 20, 25, or 50%, etc.? Alex, I don't have that information. do we buy the call option on a Monday? Did we buy it on a Friday? Tremendous difference because the position can move the same dollar amount either day, right? If I'm fib to fib line is $10 and my fib is $10, I can move that in one day. If I bought the option on Monday, maybe I paid $16 for it. If I bought it on Friday, maybe I paid $7 for it, right? Well, let's say 7 to 17, right? 17 on a Monday. Now that let's do this. Let's say that it's $20 on Monday and $10 on Friday, right? If the stock moved a full $10, I made 50% on Monday, but I made 100% on Friday. So it's harder to say that unless I wanted to break each of the days down. So I don't track all the metrics for it, Alex. So sorry about that. But the overall, you're looking at probably 25 to 50% ish is what we're looking at on our day trades, especially if you take into consideration the micro day trading, you'll get smaller P&Ls. Let me rephrase that. You got a better chance of being right in the trade, but any kind of breakout you're going to miss because on the micro day trading where you get the pullback and the bounce, Alex, and you know what I'm talking about. Um, any kind of run like that, you got a better chance of being out of the trade with a profit, less of a chance of it took back off and ran the end of the day, which we've seen some of those do by end of day, right? So it makes sense. Thank you. You're quite welcome. So if we look at let's see, Costco was one, Oracle, Amazon, Coinbase. So Coinbase, we've only got the one trade off on Coinbase. This was our day right here. Boom, boom, boom. Gap, retest, run, out. Right? Beautiful. This is all part of the pop system in there. Right? If we go to here, and I don't sugarcoat it, folks. Every single trade is listed. There's one trade for CVNA, right? And I think that's because their vending machines are empty right now. At least the one by us was. They just refilled it. But here we thought we had a good bullish trade there. It was fine. Same thing. I mean, it was just everything we did was off. Okay, everything we did was off. So neither trade worked out on CVNA. Oracle is another newer stock for us, but $3,900 on that one setup. See, listen, can you find the same pop setups that I do? Without a doubt. Without a doubt. But do you see the same things that I do? Do you recognize them the same way? Do they mean the same thing to you? Right? Maybe not. And that's where, you got folks like Roman and Will and so many others that are in power option plays and have been for years. Why? It's not that they can't identify them. I mentioned Roman, Will, right? Trip moved from student to coach, right? But they're in a trading room where they're trading this stuff 3 days a week together, right? As part of our inner circle group. So it's not that they can't sit there and say, well, we could just do this all on our own. Yes, they can find trades on their own. But the analysis that I do and the handing you of the trades and the stuff like this, I'll show you the previous one. The stuff like this, the action plan, where it tells you exactly what to do. We've got an open trade. This is an older one on AMD. Okay. We've got some earnings coming up on various companies. That was day trade. Booking is earnings. Day trade, we're looking for a clear and concise entry. We've got a very specific setup in there. We just had, I don't want to show that one because that's still in play. Here's where we changed over Carvana and Dash, APP, and Oracle. This is when we added those to our list. Bullish with the pullback to the 8, aggressive, right? All of these are your entry signals, right? Everything here under notes, that's your entry signal of what to do. Watch is it was a brand new stock. We just added it. I said, I'm going to watch this a couple of days before I consider trading it. We did, and I'm very happy that we did that, right? No sense in jumping right in. Let's make sure you fully understand the breadth of the stock, how it moves, thinks, eats, breathes, sleeps, right? Drinks. So overall, pretty good. If we go back one more time to closed trades, guys, the trades from last week were 36,036. And that was on 1, 2, 3, 4, 5, 6, 7 trades, 2 of the one against us. And so if we took, I got a calculator here somewhere. Where is it? I got a button for calculator, I think. I do. So we took 36,036 and divided it by, what did I say? 1, 2, 3, 4, 5, by 7. Right? It was $5,148 last week per trade, including a $5,000 loss. Right? Well, Rob, I only did one contract, and you made $514.80 per trade on average last week. All of these were day, none of these were swing trades. So you were in and out the same day. Okay? All right. Again, not bragging. That's not what this is. This is to show you the possibility is there. I show the trade setups that we do through Pop or Trade Watch alerts or whatever it is. I show those to you, share those with you, even the ones I did today. I share that with you to let you know this is what I'm doing. And then when others chime in and say, hey, Rob, I did this trade today. Alex says I did that trade today. That's to let you know that it's not just me. It's others in the group that are doing the same exact thing, right? It's taking the same trades. All right. So Tom said, can we find the same trades not using Fibonacci? You know, Tom, you might be able to, but it depends your system. Would they be the exact same trade? I don't know how you would do the exact same because I use Fibonacci and Confluence to make my decisions. Without a Fibonacci there, you might identify other levels. But here, I took Amazon or Oracle rather off of this fib line. Right? Could you have identified that and said that it wasn't a fib in there? So the fib didn't exist. Could you have identified what's down in there, somewhere around there, and it's okay, there's my support level? Yes, you could have. Would it have given us a confluence still? Yes, you could have. But now my fib line is up a little bit higher, right? Would that have made a difference? Might have. It might have made the difference of getting the trade or not getting the trade. So, but to take that question a step further, Tom, can you find good, successful trades and never look at a Fibonacci? The answer is yes. The same exact trades, that I'm not sure of, because you've got to do some analysis that takes you beyond what the average person's able to see without having that series of lines in there. I don't see it. I may know something's going on even if there's not a fib there, but I really don't know what it is until I draw it. Alex said, Tom, for day trades, I have moderate success with retest and bounce or fail off person's pivot points. But of course, I prefer fibs, especially confluence with fibs and pivots. Well, I appreciate that, Alex. Thank you. So again, my input on it, Tom, and then Alex, who's been doing this now, for a little more than half a year, I think, back at it again anyway. So, but Alex listen, Alex is at a point right now. When did you start, Alex? Originally, when did you start learning the market? Tom, you're welcome. December of last year. You had not done anything before that, Alex? I thought you had started once before and then really jumped in the end of last year. Hence me saying 6 months. I didn't remember exactly what it was. But I see it all the time where someone will start in the market and they come to some classes, they buy a product or a tool, a class, a training, whatever it is, and then they disappear for a while, right? And they got one training session that they purchased, may or may not have watched them. I don't check who's watched the videos or not, or the trainings or not. And all of a sudden, 6 months, a year, 2 years later, they come in and you see them in everything. They're there, right? And that's because 2 years ago when they started the diet, they really weren't committed to losing weight. Today, they're committed. They're doing whatever they're told to do. And that's what it's all about, is it's time. It's time. I have gone through a very major change as far as activity in my life. Weightlifting has never been something I really did. I used to love to run. Tore both of my meniscus in both knees, one in each knee. Tore them both. One I've had surgery on, the other one I have not. I don't know if we're going to or not yet. We're still trying to evaluate. But the doctors basically said, no more running. You can't run. You can't get on a treadmill. You could bike. You could swim. No Stairmaster. No, none of that stuff at all. So I had to shift over to weight training. And I started that at the beginning of the year. I've done more weight training this year than I've done in probably 20 years. Right? More days, because I track every day. Of course I do. Every day, every weight I pick up, I can tell how many pounds I lifted that day, everything. How many per exercise, sets, reps, all of it is tracked. And yeah, and I'm doing the bench press and the flies and another chest machine, which has got a little bit of shoulder in it too. And I could see some gains right on it. I could see it from my DEXA scan that increased muscle mass. So it's working, but I was kind of fooling around. I was doing it, but no real desire to jump in and say, let me do it. Same with trading, right? The last couple of weeks, I've gotten very much into the types of routines, the specific exercises. What are you doing for what muscle, and lifting until one rep from failure, and trying to really hone in on weight. And I've seen maximum gains or massive gains on the weights that I'm lifting, because I'm not doing this saying, oh yeah, the first 10, that was kind of tight. So, or that was okay. I'll use that weight. No, it's how far can I push it without hurting myself, of course, and not getting injury. And it's no different in trading, right? I'm ready when it comes to weightlifting, weight training. I'm ready. Am I the best at it? Absolutely not. There's no question. There are so many people, probably a lot here, that are much smarter at this than I am. Okay. But remember that 100 hours is what it takes. I've got my 100 hours in. And I don't mean I've got over 100 hours of training in, because my average session is an hour to an hour and a half, depending on what body part I'm doing and how much of a rush I'm in to cut down the distance between my reps, my sets, and get out of there because I'm busy with a meeting or an appointment or something. I've put that 100 hours in. There's no question of the lifting, but I've put in more than 100 hours of the learning side of it as well, of listening to people much smarter than I. And look, there's so much you can do with GPT and so forth for everything you do in life. Um, you could build all this out. So Alex said, I started about 10 years ago, but then set it aside for years until the Fibonacci class this year. I started actively paper trading again this past December, and almost every day since then. So going on 8 months learning and practicing. There you go. I appreciate you filling in the details for it, Alex. And that's kind of what I'm getting at, folks, is start doing the paper trades. Come to this training every week. Enter the trades into what you're doing. Share them here. You want to send them to me? Send me screenshots like Brenda did. I'll share them. Send me the screenshots. Make sure there's no pertinent information on there. Hide your account numbers. Ideally it is a non-funded account, right? But hide your account numbers. If that's the case, just block it out there. And I'll gladly share it here. No questions asked, right? This is meant to be a safe space. I'm not trying to pressure someone into doing something. What I am trying to do is help you to see the value of if you do it for you, not for me. It doesn't matter to me if you made $1 million on a trade or $100 on a trade. You made it. I didn't. I get excited for you. Don't get me wrong, but you're the one that's making it. This is all for you. It's not for me. And are you helping others along the way? Yes. As Alex and Brenda and Trip and whomever else is sharing their trades. Sorry, Roman, whomever I might have missed here today, but as others are sharing their trades, you're seeing the possibility. And hopefully you're going back and saying, okay, what did Trip see on the cues today that caused them to do that? Oh, I see. I bet you it was this right here. Right? Okay. Let's go back into the presentation. Let's go take a look at economic reports. Okay, so nada for today. Ugh, no drawing tools open. Nothing for today. Let's take a look at mañana once I get my drawing tools going again. I had them open and I closed them down, and because Zoom would not start. So it forced me to close. Come on. Where'd you go? All right. 3, 2, 1. Pause. All right. So 8:30 tomorrow is Powell. It'll be interesting to see what, if anything, gets said, if any questions are asked based on Trump wanting to fire him. Whether he's legally allowed to or not is another question. Or telling him he should resign. I don't know. But I think that meeting, it is marked as orange. I think that could actually become red. If it was during the market being open, then I would be very much more concerned about it than at 8:30. Yeah, because it could have some impact, but it won't really do anything unless you're trading futures. 10 o'clock, you got Richmond Manufacturing. It's okay. I'll give it one check mark, right? Because it's okay. It's pre-market. It's post-market. 8:30 on, well, 10 o'clock rather, right? It's 10 o'clock On Wednesday, I'll give it one check mark. It's orange, right? Unemployment, yeah, it's pre-market. It's a big report, but not one that really concerns me. On PMI, three check marks. This is a big one. Flash PMI, they're the same report, the same exact report, right? Out there. So those are big ones. 9:45, that could have an impact on the market. Watch that, early morning trade. New home sales at 10 o'clock. We'll give that one check mark. Durable goods, I don't care as much because it's pre-market 8:30, so not really a big thing there. Brenda said the economy is doing great. Would there be a need to lower rates? So there's yeses and nos to it, right? Tripp and I have had this conversation, and I think we were in Mastermind one night, and this came up. This conversation. He's looking at it from a much different point of perspective than I do, where I think that we're sitting right now on the potential of what could become a real estate debacle, because there are people stuck in mortgages that they've got to sell their house and buy something else, or and they can't afford it. They can't go from a 2.5% interest rate to a 7%, 6.5% interest rate, right? They just can't. It's virtually impossible for them. Even if you go the 20-year route and you do the one payment every 2 weeks instead of one payment every month, even if you do that, they just cannot afford financially to make it happen. There's a lot of individuals that have bought houses, and with the high interest rates that they have, they can't. I mean, listen, I can go on Facebook. There are groups I belong to where you can assume mortgages for people. Listen, the house is worth $300,000. It's got $250,000 in equity. So pay me 50 grand and you take over the mortgage. So there's 28 years left on the mortgage. It's 4.5%, blah, 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 blah. Right? There are actual groups that you could find like that out there. Right? And there's one in particular that I belong to in an area that I'm investing in right now. I think from a housing standpoint, Brenda, you get into the situation of and credit card debt. You're getting into a situation that people just can't afford it. We've got the largest credit card debt in history right now, and with higher interest rates the way they are, people just can't afford it. Then they're not paying it off. So this whole thing about tariffs and all the problems and worries we've got with tariffs, I think tariffs is the smokescreen that we're throwing up right now, just to pretend you don't see. You see this hand here? No, you don't. It's behind my back. See, everything I'm doing with the cards are behind my back. You can't see it, right? I'm making you focus on this instead. I think that's what the tariffs are. If you got $1,000 product that you buy and there's a 10% increase on a tariff, it's not going up $100. It's going up $10. Why? Because the U.S. manufacturer or reseller is only buying it for $100 and selling it for $1,000. So there's the 10% on what they paid, not on what you pay. Now, there might be some other places where people just jack prices up because of it. That's different. Okay, but realistic, in direct correlation to it, no. So we shouldn't raise rate or lower rates. There are places right now that are borrowing money from one country. It's called a carry trade. You borrow money from Japan at 1%. You come to the U.S. and you drop the money in the U.S. and they're paying you 5%, 4.5%, whatever the numbers are. Okay, so we need to get back on that even keel of being competitive worldwide, and we're not with what so many other countries have done. At least, again, my opinions to it, or opinion. So the trip, yeah, the mortgage rates are based on the bonds instead of the Fed rate, but the reality of it is the bonds haven't moved, and yet we see rates go up and down. We've seen, because I get a mortgage rate update every day, because I'm in buying mode right now. So I want to know if there's anything better out there. So I get an update every day, and you'll see it's not big. It goes down 0.02 or up to 0.3. It's not huge, but the bonds aren't moving, yet we're seeing that move, right? So it's not based around the sale of them. The bigger moves come, but the bonds are going to move what? Based on what the Fed does, right? Overall. So right now, I would love to see us. We can't just drop. We can't. If any Fed comes out and just drops us 0.75 point, 0.5 point, I think it's disastrous. But could I see a Fed dropping a quarter point? I saw it on CNBC this morning. 96% chance they said of, and I haven't checked it today. 96% chance of no drop at the next meeting. 95 and change, and then 4 and change of yes, we're going to drop a quarter point. I don't see it happening. I just don't. But if we see rates come down, we'll see mortgages come. Bonds will come because bonds won't pay what they are with the rates if they go lower. They'll readjust the bond rates as well. All right. Let's take that down. Market review. Let's go take a look at the SPX. Excellent event. And another all-time high. Guys, I've been talking about this now. We talked about it here last week. But I've been talking about it now for a couple of weeks. Oh, come on. I'm trying to unscrunch there. Good. Okay. Right? So as we pushed forward, we got to a new all-time high here. We pulled back. We got to a new all-time high here. We pulled back. And then we started coming back. We got close to the 8 over here, but that was pretty close. But we didn't quite get in there. We got into the 8 here, into here. We closed here with another all-time high in this day. But the thing to take note of is what's happening with the moving average in relation to the fib line. So the moving average is going higher. The fibs were holding right here. Our tops were holding right in there. So we're building that ascending triangle, right? Or that ascending wedge, okay? Triangle. And I said, I think we're going to see a breakout, but the breakout is not going to come where all of a sudden we're not breaking out. And today we just get this massive move to the upside and we're up 100 points. I don't expect that to happen. But what was important was we were getting the 8 moving average closer to our fib line. That's what was important. And we were kind of flattening off here price-wise. That one big day helped. This day helped. We started to climb back up again. Spacing is about the same. It's opened up a little bit between the 21 and 55, meaning more spreading out. And today we get the gap up just above that 6,300 level. We bounce off of that level and we take off from there. We're up 34 and jingle right now with 6,402. 6,400 we'll call it is our next upside target, and that is the -5. Right? And then we have the -618 just above that. So overall, S&P is doing what it's supposed to. Now what? We've now broken ahead. We are at all-time highs yet again. 52-week high, all-time high, all of them, all over again, right? So now what? Well, that 6,400 is the next target, but not from here. What do I mean? It can go up another day or two from here. I don't want big moves up, but I'd like to see a move up, right? Or wouldn't mind a move up, but I want to see a pullback. I'd love to see another day up. Close it where it is, a little bit higher today. One more day up, not big, go into the middle of the channel, pull back. The 8 moving average gets up closer to the 6,300, bounce off of there. Now what did we just do? We created a pattern that the stock advanced and the moving average came behind it. The stock advanced, you got to pull back, and the moving average came behind it. The stock advanced, we got to pull back, and the moving average came right in behind it. Right? You're adding strength to that pattern. That straight breakout of just go up is not a good pattern. The market doesn't want to see that. They don't care for that setup in there. It is not a confidence builder, right? To me, it's confidence shattering because I can't trust in that pattern holding, maintaining. I just can't. I don't see that being a stronghold in the market at all, okay? So S&P 500 looks great. 6,300 is support, 6,400 is resistance, right? We're in a bullish bias right now. It's a rank of 2 where we sit, as of this moment. It's a rank of 2, but keep that 8 moving average chugging up higher, right? Realistically, the blue zone is not required any longer in there. I'm going to leave it for now. I'll take it out in pop. So everybody in pop sees us do it, but the blue zone really is not required there. That recent swing high is not required there. But we could put a swing high here, a swing high off where this one is. So we could just drag the line over, one off of here. And we can't really draw it off here yet because you can't use the candle to the right as a swing high or low because you don't know if that's the end of the pattern or not. Right? When it comes to VIX, fear, yeah, we're down a little bit, a penny, but we're at 16 and a half. It's not like we've got that far down to go, okay? We look bigger picture on the S&P. Let's go to a weekly first. Right? I need to find a place to redraw the fibs. I don't have it. Not yet, I don't. There's no pullback that's taken place. We go to a monthly, right? We've got a fairly new fib drawn on the monthly, good pullback in there, strong move, good recovery. We could check for fibbits if they're needed in there or not, but they might be. But overall, very, very, very nice move on the S&P from a monthly standpoint, which means we've basically been in a really nice bullish up run since October of 22. So very nice, very nice. We'll go back to a daily. Perfecto. All right. Bueno. Let's go back into presentation mode. And all right, here's what we got upcoming this week. Check-in is tonight. The quarterly is August 1st and 2nd. We've got a special guest coach coming in to teach that. Mastermind group is on the 22nd, which is Tuesday, tomorrow night. Trading You is tonight. Monster Market Movers is Wednesday. Power Hour and Trading Coaches Playbook are all on regular schedule, as is Pop, Covered Call, and E-Mini. They're all on regular schedule as well. Omega charts, guys, you'll see some emails coming out on Omega charts. There are some specials out there right now on it. But Omega charts, it's the first and last charting program you'll ever need, right? And I say it with as much confidence as I possibly can. I have been using this program now for over 20 years. And it is my primary charting program, period, the end. So when you see the emails come out for it, folks, oh, it looks like Andrew dropped something in there. Yep, it was for Omega Charts. So you could click on that link and check it out also. All right, weekly training topic. Every week we put one training topic together. A lot of it comes from your suggestions. If you do have suggestions of topics you'd like to see me train on, send an email. Doesn't mean we will. Send an email. We log it into a database, and we pick each week from that database of what we're going to talk about. Ideally, we look for things that are relevant to what's going on now when possible, but it doesn't always work out that way. So finding trading candidates for today. How much more for today could it be than finding trading candidates for today? Okay. So realistically, you need to get to a point that, again, we'll use Omega charts, right? What do you want your list to look like? I don't know. Let's build it, right? So I'm going to create a filter. I'm going to create a new filter. Right? What do I want in that filter? Well, I'm going to need symbol groups, right? What group of symbols do I want to work off of? I'm going to go all the way down to the very bottom. I think it's the last one. Weekly optionable stocks. So that gives me 632 candidates to start with. If you're not weekly optionable, I ain't interested at all, right? I'm going to go ahead and here. Now let's go to price and volume. We'll go to close, right? And now we got to pick some ranges. It comes up as percentile, change it to value. Don't use percentile. I want my stock to be at least 80, and I want it to be under 200. Of that 632 stocks, right now we've got 157 that meet that criteria. That's not bad. Still a lot of stocks to look at, though. Let's add another condition. Let's go in and put volume in. Just regular volume, not 20 days, 5 days, 90 days. Nope, volume. Straight volume. Go to value. I want it to be above 1 million. And I never put a top on my volume. That takes me down to 138 candidates when I do that. All right. So could I then tweak this and say, yeah, it's too many. Maybe not 80. Let's go to 100. So we had 138 candidates in there. If I go to 100 instead of 138, I wind up with 94. Still might be too much. Instead of 200, maybe I go to 180. We were at 94. I'm now at 82. All right, that's not a bad list, right? And you can keep playing with it, right? Once you're done, you could save that list. Now you've got a starting place, right? That's your list of candidates that you're working off of. Is it too many to look at every single day? 82, it is. But this may be your big list. Take this list and put it off on the side. Choose your 10 or 20. I want to be careful. I'm really not liking the 10. It's not enough. Choose your 15 to 20 stocks from that list, and they're the ones that you draw your fibs on and analyze every day. Once you've got that done, then and only then do you watch those candidates, not all 82, the 15 or 20 that you found, you watch them for the next week, 2 weeks, every day. End of day, you can look at some intraday patterns if you want, but end of day is really what I want to see as a bare minimum. Okay. And what is that doing there? Why? Why are we doing that? Start to learn the heartbeat. What does this stock do? How does it react? How does it think, eat, breathe, sleep, drink, right? What does it do? Then and only then you shift over and say, okay, I'm not going to bother saving this, right? You shift over and start with funded trading when you, not me, not somebody else, you feel confident that you're ready to start. And how do you start? One contract. Rob, I got a $500,000 account. What the hell is one contract going to do for me? Keep you safe. If you lose on one contract and you spent $8 on the option and you lost $800, all right, I don't like it, but I'm not going out of business because of it. You did 100 contracts and you lost 80 grand. Houston, we have a problem. Or 10 contracts and you lost 8 grand. It's a lot of money. Get started with just one contract. Continue to do that one contract, and I would only have one open trade when you first get started. In other words, and I'm talking about trades you open today. If you open a trade on Apple, don't open another trade on Coinbase today or on Microsoft or whomever. Just focus on the one. Pay attention to the one. Get really, really good at your platform. And I saw a platform question come up here. Tom asked, which online trading app do you recommend for new traders? So I'll say it this way, Tom. I still, to this day, primarily use TradeStation. I have TOS accounts, but I primarily use TradeStation. If I was starting over today and not being a stubborn 60-year-old from New York, I would start with TOS. There's no question. I cannot stand the tech support at TradeStation. I think it's one of the worst things in the world. It's terrible. You got to sit and watch the app and wait for the go live thing to click that there's someone there and you can click on it to get in a queue to wait. Call TOS. I've called them at 3 o'clock in the morning. Now, I haven't called them since they were taken over by whomever bought them out, Merrill or whatever it is, Schwab, whoever bought them. I haven't called them since that takeover, but when I was learning that platform, literally 3 o'clock in the morning, someone would pick up and answer. Looks like you're going to order on DoorDash today. Schwab, okay. Thanks, Brenda. TOS customer support has been great for me so far. Alex said, yeah, so Tom, that would be me, who was a secondary user of it, saying, yes, I would suggest them to anybody that's newer. Brenda said, me too, Alex. She loves them. So, and that was the screenshot that I brought up earlier was from TOS. Right. So that's who I would go with if I was starting out all over again. But there's a process to this. Don't dive in deep, but you need to dive in. Right? You need to start. And that start is picking the batch of candidates you're going to work with, big list, break it down to a small list. I like these. And how do you break it down? You take those 82 or whatever the number was candidates, you look at them all, and you find the ones that you like the most, and then you draw patterns on them. If you're using fibs, draw the fibs on them. Maybe you have 40 of them that you really like. Draw fibs on them. Okay? Then go check every one of them out on an option chain. You're going to find that some of those stocks, the options on them, the 65 to 85 delta, have nowhere near enough open interest. Other ones you're going to find have plenty of open interest. The bid is $17 and the ask is $19, $20, $23. Oh, it's too big. Or you're going to look and the options mid price, which is the distance, half the distance of the bid and ask. So let's say it's $10 by $11 is the bid and ask. $10.50 would be the mid, right? You're going to find that mid price is $10.50, where if you look at the theoretical value on TradeStation, it should only be trading for $6. So you've got a highly overvalued option in a very low VIX market period. Now, it could be because earnings are coming up on the stock. That's very possible. There could be other news out there. There could be a merger. It could be a pharmaceutical company with a phase 3 trial going on. There's 100 different things that could do that. But for right now, they may not be the best choice for you. Whittle that down to that 15 or 20. Then go back and analyze all the fibs and watch them for the next week or two. Every day, just make decisions on it. Some are not going to move. Like we have all of this movement here, and I'm watching this if it was a stock, and there's nothing happening here. It's just a watch every day. Now we broke out. Before today, If we were here, I'm in position one in the chair, all the way back here. Nothing going on. We break out to a new all-time high. We get up above our fib line at the negative 382. I go from position number one to position number two. I'm not ready to do anything yet. And then today we gap up and we pull back, we bounce. Yes, I'm in position number one, ready to rock and roll on the trade. Right? So when we look at finding trading candidates for today, that's the process. If you did not get all of that, we'll have this up probably tomorrow on YouTube and other social platforms. I may actually strip this section out as well, but go ahead and 50 minutes in, 45, call it 45 minutes in or so, and rewatch this section. Spend the 7, 8, 10 minutes on it just to rewatch this one piece, right? It will well be worth your time spent to do it. All right? Good. What candidates do you want to look at? Drop in your stocks. Brenda, any trades today? Let's see. Brenda's got in there SPY. Oh, let's bring it current first. Oh, you know what? Let's do this. Let's go and grab all symbols so I can see Fibbits right away. Beautiful. Bueno. SPY. All right. All-time highs today. So here's the thing. We took a nice gap on it this morning. In case you were wondering, we gapped on it this morning and we never got a pullback on a 5-minute. Okay, let's go to a 1. We go to a 1-minute candle. We gapped and never got a pullback. So no trade taken. Now, if you're the breakout trader, there's a great trade setup for you. Fib line is 628. It's at 631. What a great day, right? What a great day. I didn't get to take advantage of it because it didn't pull back. Am I disappointed? No, I'm not disappointed. Not at all, right? That's not part of my system. But tomorrow we pull back to that 628 and bounce. I'm looking at 639 as resistance. I got a rank of 1, bullish bias rank of 1 on SPY. I am loving it at this point. So I like it a lot, Brenda. XYZ, that was one of the stocks we pulled out of pop, right? Last trade we did was we lost $380. And of course, as soon as we pull out of pop, it's up, right? $5 and change. Of course it, but of course. Let's go back and look at the whole fib. I know it's a bit older. Not bad, but a little bit older. So we're at the 618 right now. So look at the 84.64 as next resistance, the $74 as the next support. But it's too far away. GLD is our next one. Roman, I took it literally when you said, looks like I will order a DoorDash today. I thought you were going to order some food. And Roman just typed in, I'm out of Dash, 25% ROI. Now I have to order DoorDash. Okay. Good for you. Give the money back to where you made it from, right? Support who you made it from. I'm all for that. So good gap up today on GLD. On gold, we're at 312.68. Same thing, Brenda. I'd love the pullback in there, but I don't know if we're going to get it. Give me a little bit higher at the bounce off the 312 and look at 317 and 5/8. Sorry, 5/8. 0.625, right? But 317 and a half, close enough, right? Look at that as our next resistance or target. All right. Alex is asking for RDDT, which is Reddit. So I don't have a fib drawn on here. I've got a channel on this. Let's go ahead and this is all sideways moving here. This is a good move down and a good bounce. So 35 to 53, 35, 45, 55, 18, 18 bucks, 18 points. Let's see what the fib is. 16. Yeah, that's why we haven't really drawn it. It's just too big. This is from March of last year. Yeah, I mean, we need to fib it in there. So, Alex, if we can get the bounce off the 144, 153 as resistance. Yeah, Alex said I've got the same channel for Monster Market Moves. Exactly. I like the channel component better. And ironically, we're at the same level. 144.09, 144.59. So we're off by 50 cents in there. So nothing, minute at that point, right? Pull back to the 144 and a half, 154 is a better. Yeah, I'm going to take that fib out of there. I do like the channel better. Yeah, so that 154 is a better resistance there, Alex. I like it a lot. And then Tripp's asking for TLT. Oh, treasure, okay. Let's see. So first thing I see, I don't really look at this one, but first thing I see is this back here. 87, 88, 1.5. Yeah, we don't need Fibbits, thank goodness there. But we probably do down here. 85, 67, over $2. Yeah. So let's add in the negative 136 and the 118. Okay. So yeah, the pullback to the 86 and the bounce trip would be great. But we're in a neutral bias right now. So um yeah, nothing that's exciting me. We're kind of in the middle there, but realistically, that's what we're looking at. um, you said you prefer the channel, but I drew the fib on RDDT from 521 through 621. Thoughts? Yeah, nothing wrong with it, Alex. I just whenever we need an interim fib line, unless you drew from somewhere different than I did. Let's see. RDDT. I always mix up if it's RDD or RDTT. Um, you drew it from 521 to 621. So is that like here? Yeah, I mean, Alex, you could. And I'd have to go through the full analysis of it. Let's see. 47, 37, 10 points. Yeah, okay. So we don't need to split the interim one, so that's okay. But Alex, I still believe that the fib I drew was a good fib, and there was no reason to redraw it yet. So this fib might work better, but this is still a valid fib inside of here. So can you do that and say this one is just not as relevant? I like what's happening more here. Yes, you can. Um, room between the fibs and the pullback 236 hiccup and around the 618 seems to check out. Yeah, it's all good, Alex. Where you chose from is fine. Nothing wrong with it. Again, we still have the ability back here. That's still a good fib. It just messes me up numbers wise because I got to split too many levels in half. Right? So 50 to 618 needs a split and the likes. Okay. But yes, Alex, from where you're analyzing it from right off of here, it's fine. It's fine. I'm doing the same thing off of the channel. You're quite welcome, Alex. All right, so now look, those of you that didn't put in a chart, you still sat here and watched that entire section. Think of this come next week. If you did enter a symbol in there, would it be that more helpful to you for me to help talk about yours when you're getting to ask more questions about it than watching somebody else's? I get the watching somebody else's, but I can't believe that everybody here doesn't have a symbol. Now, we couldn't get them all done, right? But I can't believe everybody here doesn't have a symbol to look at. Again, I'm just trying to encourage you to get involved with the process. This is part of it, right? This is the success path, the pattern that I've seen works is you're involved in the community, you're entering it in, you're talking it out loud, you're sending it out to the universe or whatever it is you're sending it out to, your God or whatever it is. You're putting it out there that you're doing it. And I don't mean go take out a billboard for it, right? But you're actively engaged with it. So, all right, everybody. Hey, have a great rest of your day. I'll leave the room open a couple of minutes. Andrew's got some links in there for y'all. Take advantage of those, and I will see you all at our next update. Take care, everyone. See you soon.